All right, everyone. So we're going to continue on here with Chapter 10, Setup for Shorting Bear Flags. So this is, again, a standard technical pattern that we will see all the time. We talk about it in Chapter 5 on intraday chart patterns. Your standard bear flag. And you can, of course, trade this to the short side. There are times where I'll trade a bear flag to the long side if I'm trying to do essentially a reversal trade. I'm thinking that it's going to base out off this level and reverse. But shorting a bear flag is a much lower risk strategy of shorting a momentum stock versus trying to short a false breakout or shorting a halt resumption or shorting going into a halt going down. All of that is, you've got to be super, super quick. So shorting bear flags does not require you to be quite as fast. It can be a little bit slower moving. However, as that risk goes down, so is the profit potential in most cases. Bear flags, like shorting trend reversals, can work well both when they're in the form of a small bear flag near the top of a move. So it's kind of pulled back and reversing kind of right at the top, sort of like that setup on GameStop at 172. How I said this is kind of sort of a wedge here right at the top. So that's kind of a bear flag, even though doesn't have the traditional flagpole. It's still just kind of something's bearish about it. Or it can be when we have a bear flag just below the volume weighted average price or around low of day, and then that's for sort of an all-day fade after a strong move early. And we had one today actually that LIXT, I think this was it. This one today, ended up really kind of just being weak after being strong pre-market. So we had a bear flag right there for sure. Came back up to the volume weighted average price. That's probably the cleanest bear flag we had right there at the opening range. These ones weren't quite as clean because those green candles are kind of big. So I would say that these are sometimes less obvious to me in terms of seeing them in real time. I'm usually watching stocks at high of day. I'm watching stocks that are squeezing up, that are at high of day or are right off their highs. I'm not often watching stocks at low of day. So even something like this, maybe I was watching it because I was watching it at the open, but pretty quickly I just kind of stopped watching it, And so through this area, I'm not noticing it. GameStop, which is sold off here, this was a bear flag, but it's kind of hard for me even to find good bear flag examples because I just don't spend a lot of time looking at stocks that are at their lows. I'm usually trading stocks at their highs, but that actually was a nice bear flag there. First candle to make a new low, clean resolution for a sell-off, back down toward low a day. So they're there. And if you're searching for them more actively, you may even want to try to start scanning for stocks that are hitting low of day instead of high of day to be more kind of tuned into that. But again, that's not something that I really do. So I'm going to show you a few instances of this setup, but it's not really a pattern you'll see me trade that often for the obvious reasons that we've already laid out here in Chapter 10. But I will sometimes find myself caught in what is sort of becoming a bear flag, which is, not fun. And being able to recognize that that's happening can certainly help you. And I think I recognized it was starting to happen on GameStop, and I did exit fairly quickly, but I could have hit the exit a little faster. So a target, I typically look for a flush and then look at daily support levels, half dollar, whole dollars as possible bounce spots. The only risk would be that the trend reverses, but in this case, shorting a bear flag is trading within the trend because the trend is going down, generally speaking. If you're doing it as a trend reversal off the very top, that could be a little riskier. So it does depend on whether you're shorting what appears to be a bear flag near the high of day and above the volume weighted average price, or a bear flag near low of day. Stop loss, high of the most recent pops, or the top of that bear flag consolidation. So here's an example where on Geo, this stock, clearly we had news that came out, right? That was obviously what caused this sudden drop from $32 to $16. This is very similar to what we had on Workhorse, whatever, this was earlier in the week, I think it was at this point. I don't remember which day, but this drop right here, very similar. News comes out and sell off. And it also included halts. And it also bounced nicely off the low, no doubt about it. But when news first comes out, this is very common, this little pattern right here, where the stock will sell off for a second and go sideways before really starting to roll over. And that is a great opportunity to go short. Similarly, when news comes out that's positive, often spike, pull back for a second, and then continuation. Now, sometimes they don't even do this. They just go straight down. And if the news is strong enough, I may take starters around whole dollars and half dollars. So I may just kind of start adding around those levels, but it's always going to be a chase. But if the news is really, really bad or really, really good, and I'm thinking that we might go into a halt, I may take that risk. And in this case, we dropped from $32 to $17 a share. Bear flag here and a bear flag here. So the bear flag consists of a sell-off and then a couple candles of sideways, either right at a flat bottom or even up a little before coming down again. Popping up again, coming down again. Let's see if we got one on WKHS. I don't recall. I think this drop was so fast that we didn't. We're in a market right now where traders are jumping pretty quick. So, but you did, I mean, on a 1 minute, this doesn't look like it, but this would have been the closest thing to it right there. It's very similar. All right, so let's move this back out of the way. Okay, so let's look at another example. So there's a nice 5-minute bear flag on NVIDIA. So we get a sell-off here, and this is below the volume weighted average price, which would have been up here somewhere. It pulls back, it comes up to the 9 moving average. It's a clean bear flag. That's a nice clean bear flag, sell off through the low. That's a strategy that you'll see large cap traders taking a lot. For the large cap traders, they're certainly more comfortable trading the short side because availability of shares to borrow has always been better on large caps. You know, mid caps and large caps, brokers will give you shares to borrow. Just to give you kind of the background, it's the clearing firm that stipulates whether or not there's shares available to borrow, and it's part of their risk management. They don't want to have, traders blowing up accounts. So they restrict shares on very volatile stocks, small cap stocks that potentially could squeeze up 100, 200%. And on stocks like, whatever, your Facebook and Apple, they'll let you short it all you want. So a pattern like this on a stock like NVIDIA, that $100 a share, that's going to be common to have shares available to borrow. This one on the 5-minute is a little bit choppier. So we do have a bit of a bear flag right there, sells off, pops up, goes lower. So right here, we're stair stepping down, right? We're taking the stairs down, which is good. Then we flat bottom, we start coming back up. And then this becomes kind of a moving average pullback or a moving average pop for what becomes basically an all-day fade, which is nice. CLPS from last week, let me look at that one. I don't recall. So CLPS, and also the volume today on CLPS has gone to basically non-existent. These stocks will be super, super hot for a couple of days, and then they just die out. So on this one, let's see, what are we looking at here? Yeah, I'm not sure on this one let me switch to the 5-minute chart. So the 5-minute chart, as it broke the volume weighted average price here. So now you've got a bear flag right there. That's a bear flag. That's a bear flag. It's easier to see on the 5-minute. That's a bear flag. That's a flat bottom breakdown. It sold off and then it did a quick red to green move, bull flag, up higher, pull back. So right here, this could be considered possibly a bear flag right there, a sell-off, consolidation above VWAP, halt going down. It does recover, does break back down, then it comes back up and now it's looking bullish again. So you always do have to be careful with the bear flags, when they're getting higher up. Okay, so anyway, so bear flag there, and then yep, here's another one. So from 340 up to 744, that's a big move. Pullback pops higher. Pullback pops higher. Drop, bear flag, sell off, bear flag, sell off. Long move back up to the volume weight average price, and then still fades off that level. So this becomes a VWAP fade where it curls back to it and then just fades back down. So that's a short setup that some people like to trade. And there you've got that consolidation right there. Let's see. So let's look at live trading a bear flag resolution on GovX. All right, let's look at this. So this is probably just going to be an example of the actual price action versus my trade. But okay, so right here on the 1 minute, oops, we've got, so GovX is right here, and we had a sell-off and we popped back up, and what we're actually doing right now is a 1 minute bear flag. So this is a 1 minute bear flag. It's not a 5 minute bear flag yet, but it's clearly a pop, a sell-off, a little pop, and now resolution would be back through low of day, back through 6. So let's see if this resolved to the downside. And you will, and this is another thing. So sometimes, a stock like GameStop is now easy to borrow for me. No, actually, that's funny. It's not. It was yesterday. Now it's not again. So they're taking this one on and off the easy to borrow list as the volatility is changing. Now they can't really change that I mean, I guess they could. I haven't seen them change that midday at light speed, but maybe they do. I just haven't noticed it. But they have to manage their risk. So, okay, so let's see. So I am long this stock here, which is right below the volume weight average price, which seems a little risky. And there's the resolution of the downside, and that's a quick loss. So that's the bear flag. That's why we don't buy under the VWAP, or we're very cautious about it. Well, only 4,000 shares. So that for me would have been a starter position, but look at that resolution. That's a bear flag. All right, so always below VWAP, we've got to just be a little bit more cautious about these. So sell off, pop, and then sell off. Do we have another one? Yes, another one here. Okay, so this one, shorting a bear flag. Let's see, okay. I'm going to change the alignment of that text. Okay, I'm just going to be a little nitpicky there. All right, let me just move that up. Okay, so what are we working with here? Okay, so is this the stock? So we have a drop, a little pop, and if it breaks below 5, that would be resolution of the downside. Volume is like non-existent, but let's just see what this does. Okay. It's easy to borrow, and looks like I took a short on it. Wow, look at me. All right, so short there for the breakdown. This is a bear flag, so it does happen to coincide right around a $0.50, a whole dollar, which is not uncommon. Now, if it's not able to get back above $5, then we're in good shape. But here it's holding 5, and I'm in at 509. There's 98. There's 93. Okay, so now we're looking a little better. Good time to cover a little. Oh, I'm on the bid, and I am not getting filled. But I'd rather fill on the bid if I can. But now there's a buyer there at 86. So, this one's definitely a little tricky. But it is a bear flag. It just doesn't have a huge amount of range and doesn't end up really being a very significant winner. And when it gets back above 5, it's kind of like, uh-oh. It's reclaiming that psychological level. Only $426. Not a big winner on that one. All right, so with that, we'll continue on to Chapter 10, Setup 5, which is on shorting at the volume weighted average price. Okay, let's continue on.